Hello, 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 hello. Hello, everyone. Michael Brooks with Perfetta Capital. And what I wanted to do today was address some of the concerns that markets have given us over the last couple of weeks, especially late last week and into this morning. We've seen markets drop since we had some job numbers come out last week. And what I wanted to show you was just kind of a quick rundown of keeping this into perspective. And then what I'm going to be doing later this week is talking to you a little bit more about the details of the transition to Perfetta Capital, and to make sure that we're all set there. I have some packets going out to everyone in this next week or so. So be on the lookout, but I wanted to address the market concerns first, and we can go forward. So let me just show you a couple of charts and see where we're thinking is here, where really, the story has been over the last couple of years and continues into this latest market move is the fact that the Federal Reserve was really trying to tamper down inflation by raising rates, and the interest rate environment has been quite high for some time. If you can see here, going back, over a year now, we've had 5.33%. As our high for the Fed funds rate, and this is the rate that banks borrow funds from each other, and it's set by the Federal Reserve. This affects everything from treasuries and real estate markets and auto loans, credit card fees, etc. So basically, this is what the Fed was trying to do, was to raise unemployment so that the inflationary environment would be forced to come down. Now, we were seeing really good news as companies were fighting off any kind of recessionary talk. Last year, market participants, investment experts were very worried about a recession coming, but we seem to have had a soft landing. But we haven't gotten there quite yet, as we're still at these highs that we haven't seen in quite some time in the Fed funds rate, and they haven't come down yet. So part of the criticism of the Fed has been going back to 2022, as we definitely saw inflation ramping up. We did not see the Fed act soon enough, was the biggest criticism here. So they were late to the game, which caused inflation to spike and caused the Fed to put on the brakes hard on the economy to try to tamp that down. And markets weathered that quite well. Now, the story changed a little bit with this latest couple of numbers that have come out, which has suggested that maybe this has been too long in the making, and the Fed is late again on lowering rates. Now, they wanted to target this 2% inflationary environment. We haven't quite gotten there, but we are definitely close. Unfortunately, unemployment has picked up, and that caused markets to be scared. And a lot of this is a global phenomenon. Japan got hit hard, big time, in their markets as a reaction to this, that maybe we might be going into a recessionary environment possibly, and not having the soft landing that we had all hoped for. But this, I think, is a little premature. This has only been a couple of data points. The overall picture is that we have, going back here, we have a whole lot of room for the Fed to lower rates. And now, we were saying earlier that we were looking at 3 rate increases expected in our view for this year. Well, that has definitely kicked up the probability that we would get not only a 25 basis point, usually the increment that they're going for in these moves, but they're doing twice that amount, or 50 basis points, or 0.5% lowering the rates in order to combat the possibility of a recession. So the good news is that the Fed has a lot of room to go, and they have a lot of cushion here. to lower rates to get things back in line. The other good news is for those who are more conservative investors, which there are a lot of us who are not 100% in stocks, anything below aggressive in our models would benefit from the fact that we do have bonds into our mix of our portfolios. So just because stocks are down does not mean that portfolios overall are down this much, because we do have a good diversification and a ballast that bonds have done exceedingly well this last couple of weeks and reverse some of those really bad numbers that we saw a couple of years ago. So just to put things lastly into perspective here, if we do have a market correction, the last one we had was a big one in 2022, and these happen all the time. I mean, this is par for the course in investing. This is why we have a long-term perspective when we're talking about markets and saving for retirement, for long-term goals. This is nothing to worry about right now. We're going to see how markets play out here further and see what the data brings us. But for right now, I'm saying let's stay the course. Okay, so that's kind of where I see markets right now. I need to get more data. We're all looking to see what the impact of these latest changes have been and see what the response is going to be by companies and the Federal Reserve. And the last thing I'm going to point to you, just to give you a little heads up here, is my website, which is now up and live. And I'm going to be getting a lot more content in here, but this is a good base for showing you guys now that I have the website up and running. And just want to point to you your attention to the client portal section here. If you take a look here, we've got all the new brochures, and this I'm going to be either emailing or mailing out to you in the next coming weeks. So that's going to be coming shortly. This client agreement is the only thing that will need to be signed, and I'll have an easy way for you guys to get that to me. But otherwise, we're going to be investing as usual, and hopefully markets will really figure out where we need to be pricing wise and see some good returns in the years to come. So just wanted to show you a quick overview, wanted to get some market concerns put into perspective. We're going to be doing a couple of things coming up. I'm going to be having a more deep dive into this Perfetta transition, as well as doing a live event, and I'll give you more details about that coming soon. So thanks for watching, and I'll have more for you guys shortly.